Good morning, everyone. You are live right now in the Pill Method Club, and this room is how to pay off mortgages in 7 years. Jared, how are you doing this morning? Kick us off.
Doing well, doing well. So hey, what's up, everybody? Welcome to the room. And if you're on YouTube, Facebook, Twitter, or LinkedIn, welcome to the live simulcast. What you want to do if you're in the live simulcast is make sure that you are sharing this room with as many people as possible. What you're going to find out in this room is how to not look at just interest rate, but really look at overall interest cost and how you can basically take a 30-year mortgage and pay that off in 7 to 10 years using this innovative method called the P.I.L.L method. And so if you're in Clubhouse, I would love for you to click that greenhouse at the top. Make sure you're following this club. This is a great community of generational wealth building. And when you click that greenhouse and you follow the club, just check out the about description. This will give you a preview into the type of information you can learn today and the type of things you can ask questions about. This room is all about being interactive. The more questions that are asked, the more answers we can give you that will resonate and be applicable to your current situation. And Don's time is not free off of this stage, so take advantage of his free time and free advice on this stage, and make sure if you're in Clubhouse to raise your hand and come up on the stage, ask your questions. And if you're on the simulcast, go ahead and type your questions into the chat, and my man Kirk will make sure to be looking out for it, and he'll let us know about your question, and we'll put it up on the screen and go through it with the interest calculations and the amortization schedules and educate you on how to look at a refinance, how to look at your mortgage, how to look at your student loan debt, your credit card debt, your car loan debt, anything debt related. We want to be able to free you from it and help you pay it off faster. So with that being said, I would love for Don to go ahead, introduce himself and give you his perspective of the P.I.L.L method, what you're going to learn today, and then we will get into mod introductions and then get into the questions. So Don, pass it back to you.
Good morning, good morning, good morning, everyone. My name is Don Daniel. I'm your interest cancellation expert, or ICE for short. You can find all of our information at ice10klive.com, which you see right above our heads. And if you are interested in streaming that information, go ahead and click one of your favorite streaming options, and you'll be able to see our examples live today. Plus, you'll be able to see the replays. Go ahead and start clicking on following us on those platforms, clicking the notification bell. And as you join us on these platforms and click the notification, you will always know when we're uploading new information. And listen, we love to share this information with you. What we're going to be talking about, amongst other things, is since 1934, going on next year will be 88 years that lending has been done this way. The amortization schedule was introduced into our society in 1934, 30-year and 15-year mortgages, that sort of thing. And finding out that for bankers to be able to accept this, because we were coming off of the Great Depression. I mean, the stock market crashed in 1929, and this whole thing about amortization and lending to consumers so that they could buy a house was part of FDR's New Deal. Now, for the bankers to be involved in the New Deal so that they could start lending for housing, they needed some stuff. And I'm telling you, they now have a way of lending money at 3% and make 51% on it. They can call a loan. They can say, listen, we're going to lend you money at 4%, but they make 71% on that loan. You're going to pay back 71% of what you borrowed. At 5%, you pay back almost as much as you borrowed in interest over 30 years. Then you're going to pay back in interest almost as much as you borrowed. So if you borrow $200,000, you're going to pay back almost $200,000 in interest at 5%. If you borrow at 6%, you will pay back 115.838%. You're going to pay back more interest than you borrowed in principal. So the total cost of that property will be $430,000. when you add all the interest cost in. So folks, we want to start paying attention to interest cost. That's why we exist, to tell people the truth about how these loans actually work and how you can cut your interest costs by 75%, how homeowners can purchase everything they need to purchase using lending, but not pay all of that interest. How buy and hold investors can acquire property and equity at a much lower interest cost and take the interest savings and then take that money and invest that money as well. So just listen, Jared, I'm excited to get into our first example. So why don't we go ahead and get the mod introductions done, and we'll leap right in today. And I think some people are already raising their hands.
Yes, yes. So for the mod introductions, I'm going to ask that everybody keeps it super tight because I really want to get into the content ASAP. So 30 seconds or less, and I'll set the tone with the kind of the format. So my name is Jared Albritton. If you're interested in breaking into tech, definitely check me out. You can reach me at jarrett10k.com, JARRETT10k.com. Up next, we got Kenyatta.
Good morning, good people. My name is Kenyatta. You can find me at kenyatta10k.com, and you can read all about me there. I am your real estate professional in the state of Illinois, soon to be Georgia, as well as your financial service provider, assisting you with rehab loans and business purpose loans and everything in between that makes money. So connect with me if you need. And right now, we ask that you go to ice10k.com, ice10klive.com, and pick how you want to view these examples, whether it be Facebook, LinkedIn, Twitter, or YouTube. And by way of Tiffany, we're on Twitch and Wisdom. So thank you, Tiffany, for that, and enjoy.
Hello, everybody. I'm going to keep it super quick today. I'm Tiffany, the YCEO. You can find me at yceo10k.com, and I teach you how to be the CEO of your life, whether it's your business, your family, your home, and how to use strategies to win in life. And the last thing I want to leave you with is when you stop learning, you get left behind. Don't get left behind. Tiffany, I'm at yceo10k.com.
Morning, everybody. My name is Kirk Nugent. If you're interested in live video strategy, or just live streaming, taking your podcast and making it into a web show, check me out at kirk10klive.com. Kirk Nugent. Thank you.
Hey everyone, my name is Rosalora Lewis, also known as Credit Goddess. I am the key to accessing the money. If any of you guys having any credit challenges or need to build your credit on the business side, definitely tap in with me. You guys can tap into Credit Goddess 10K. That's Credit Goddess 10k.com. Thanks.
Good morning, fam. This is Valley. I am in the great state of Texas, and specifically the DFW market. I am a licensed real estate agent, and we love helping buyers for their landlord become the lord of their own land. We also work with sellers and investors to help them liquidate assets and acquire many others. If you are looking to purchase a home, we also have a financial literacy program that we only cater to helping individuals purchase a home. And you can reach me at valley10k.com. Thanks.
Hello, beautiful people. This is Credit King Steve out of Nashville, Tennessee. Definitely make sure you check out my electronic business card. Make sure you click on the room at the top if you haven't already. Shout out to all the amazing moderators. I consider myself a business strategist. I help people with everything financial, personal credit, business credit, personal loans, and business loans. We help you get the bag, as well as we look at about 10 to 20 ways of getting you financed when it comes to personal or business. Be sure to check out my electronic business card. I love to be in the room with all these awesome moderators, and I will be here to add value. It's Credit King Steve at creditkingsteve.com. Thank you.
All right. And before Don jumps into the example, I would love for everybody in the clubhouse room to click that plus sign, invite as many people in the room as possible. They will really thank you for setting off their 2022 with some really game-changing information. And if you're on YouTube, Facebook, LinkedIn, or Twitter, make sure to click that share option. Sharing is caring, and your family, your friends are really going to thank you for putting them on to this P.I.L.L method. And once you see this first example, you're going to understand why. So Don, let's go ahead and jump into it.
All right, go ahead. Listen, we're going to put that on the screen. Listen, I see some people down there with their hands. They're just not coming up, or did they go away?
I just don't see any hands up, Don. I'm not sure.
All right, I saw a hand up earlier, but I guess they left. But anyway, but listen, folks, take the opportunity to raise your hands now, because you want to know. Some of you right now are getting ready to refinance a loan. Some of you are getting ready to buy or purchase a home. Some of you are getting ready to deal with student loans. Some of you are getting ready to come out of where because of the pandemic. Some of you are your mortgages were in deferment, and you want to know how to bring them out. So see, what we're going to be teaching you is that amortization does crazy things to your numbers, and everything that we have ever learned about how lending works and what to do about it, most of that information is wrong. Most of that information makes the bank money and doesn't save you money. Right now, we are doing refinancing at record rates. And the reason why we're refinancing is that people think that, well, if I can get my mortgage 1 point or 2 points lower, that's going to save me money. And so if you're saving money, that would mean that the bank would be losing money. And why is every bank on every corner trying to refinance everybody under the sun so that they can lose money? No, they're making money. I need to show you how they're making money and how refinancing isn't always a slam dunk. It is a way to actually put yourself in a better financial position. One thing, if you're getting ready to buy a house, folks, here's one thing you don't want to do. You do not want to put a large down payment on that home, ever. You never want to get a 15-year mortgage or a 20 or a 25. You want to get a 30 or a 40-year mortgage, and we'll show you how to pay it off in 7 to 9 years. So there are a lot of things out there that we have been taught to do that we should not do. And I want you to know that people with perfect credit, and I'm going to repeat this, people with perfect credit can be fooled into paying 100 to 200% interest on loans, and they don't even realize that they're paying all of that because they're given a low interest rate. But that has nothing to do with the interest cost that they incur. So if you're wondering why these debts never go away, even at these low interest rates, because the interest cost is tremendous, and we want to save you that money. So listen, folks, I'm going to put on the screen here. We're going to put on. Do we have a question?
Yeah.
Yes.
Don.
Yes.
Are you gonna call? You know how you name your down payment deceptions and stuff like that. What do you got for interest rates? People thinking that 3% is better than 20, is better than. Do you got one for that?
Well, listen, what we say there is that your interest rate, okay, that you want to make sure that you pay attention to interest rate instead of interest cost, because the interest rate you're quoted, come on here it is. The interest rate you're quoted is not the interest rate you end up paying. How about that? The interest rate you're quoted is not the interest rate you end up paying. And this is what we're going to be talking about today. All right.
Hey, Don. So we actually have a question on the stage.
Well, let's take that question.
All right, perfect. Feek, thank you so much for coming on the stage. And we really encourage everybody to come on the stage as soon as possible. Don gets really detailed into his examples, so I don't want you to miss out on the opportunity to get this free consultation that's going to help everybody in the room, or the question that you ask is going to help everybody in the room. So make sure to raise your hand and come on stage now, because it never fails. In the last 30 minutes we'll have 10 hands raised and we can't get to you, and we feel bad, but Don has a line of clients he has to get to, so we can only do this room for 2 hours. So make sure that you come on stage while you can. So Feek, thank you so much for coming on stage. Please let us know your question.
Hey, how you doing? Thank you. I got a question. I'm actually about to close on a property next month, and I want to know. You said it's better not to put a larger down payment. Like right now, I got a FHH loan
Right.
for 30 years.
Yes.
Explain why and then you said I guess it's better to refinance after that.
No, I said that refinancing doesn't necessarily mean that's going to put you in a better financial position. Everybody's refinancing. Okay. People are refinancing their loans and the banks are refinancing everybody. But the reason why people refinance is they think they're going to be have a better position. They're going to save money somehow or pay off the loan faster. And no, it does not. It does none of those things. So refinancing makes the bank money. We're going to show you where.
Yeah, and I'm putting a large payment down. You said it's better not to put a large payment down for closing and
right. So are you looking are you following us on our live stream right now? Can you see our examples?
not like I'm just on this Clubhouse.
Okay, so listen, are you where you can get to a tablet or computer? Because you want to see this.
Is it possible you can send me the link to the back channel, or
Well, it's at the top of the screen. Yeah, so you just go to ice10k.com, ice10klive.com, put that into your computer, and then you can choose where you want to watch it. So are you already?
Yeah, I got you.
You got, all right.
I see. I put it on my TV. Thank you.
Yeah, so you can do it on YouTube or whatever.
Yeah, that's great. Okay, I'll put it on my TV.
Okay, all right. So let me know when you have it. So while you're doing that, give me a little bit about tell us a little bit about that mortgage you're getting ready to get, and we'll talk about why you don't want to put a large down payment on that loan. Okay.
Yes.
All right, great. So let me go ahead. While you're doing that, I'm going to do this. Put this on the screen and share this screen. And there we go. All right. Now, tell us a little bit about that mortgage of yours.
Yeah, right now.
Now you realize that there's nothing we're going to be able to do about the 3%. You got to do that.
Yeah.
Okay. But some people want to put more than the 3% down because they know that that's going to save them interest over time, and they'll have a lower payment. Now, is the reason why you're putting a large down payment down, does it have to do with the fact that you need that lower payment, or can you afford the payment if you don't put it down?
Yes, I could afford the payment if I don't put it in, but I would like to be comfortable with that payment, basically.
I understand totally. And listen, we hear this all of the time. So now after the 3%, how much will your loan be? That's before you put the large down payment down. So how much are we talking about?
After 3%, I can only get paid. But basically, I know my mortgage is going to be basically around $1,700. That's what
that's the payment. I need to know how much you're borrowing.
That's going to be I can't off the top of my head. I want to say it's 280.
280. Okay, so if we're at 280, how much were you thinking about putting down?
25 grand.
So we can have the 280. Then you're looking at putting $25,000 down on that. Is that correct?
Yes.
Okay. And when you do that, what are you hoping that will do for you?
Basically, just comfortable as far as payment. I think it will knock it all the way down to where, from what I remember, below 1,300 from what I remember.
Okay. So then that means that you'll have a mortgage of $255,000, right?
Yes.
Okay. So let me go ahead and duplicate this tab. So we got the 280. All right. And what is your interest rate going to be, sir?
3%.
3%. Okay. And let's see here. All right. So now if we take this loan, the 280, all right, at 3%, the payment will be $1,180 $1,149. Just like you said, that's just the principal and interest payment.
Yeah.
Okay. Now here's what the bank wants. The bank wants $144,976.40. That's how much interest they want on that loan. Now tell me, is this number, the 144,976, is this number 3% of the 280?
It went out for a minute. Say that one more time.
Okay, is the 144,000? Are you seeing this on your screen yet?
I'm pulling up. Right, I have to switch Wi-Fi. That's why.
That's okay.
Going.
That's okay. So we have $144,000 interest on a $280,000 loan. Does that sound like 3% to you?
No.
No, it sounds like 51.777%, doesn't it? That's 51% of what you borrow. Now, make sure you turn the volume down on your TV.
Okay. I got you. Okay.
There you go. So now you can see what's going on. All right.
Mm-hmm.
So now you got this is the loan we're talking about. This is the loan. So we're going to put in the 255,000, and we're going to do some comparisons. Okay.
Yeah.
All right. And we're going to put that in at 3% as well. All right. And then, all right, then that makes our payment. Calculate that. That would make our payment $1,075.09. So let's do some comparisons here and see where we are. All right. Here's the 280,000. You said, well, I got 25 grand. Let me put this down, right? And not only that, but my payment here is 1180. On this one, my payment is 1075. Wow. You know, that's $100. You know, that's $100 less. You know, that's some people can get excited about that. So we've got that going on. Now let's go down and take a look at how much interest they want to charge over 30 years. 144,976 as opposed to 132,000. So we've got 144,000 and 132,000. And so let's go ahead and bring that up. So we've got 144 minus 132. We're saving about $12,000 in interest. And $12,000, listen, $12,000 is $12,000, right?
That's correct.
That's right. That's saving a lot of money. So here's why we're saying don't put a large down payment down. First of all, we're going to give a quick lesson on interest cancellation. Is that okay with you?
Yeah.
Because you know that if you put any extra money down on a loan, you're going to save time and you're going to save interest. What we don't know is what happens when we do that. Most people know that they could put extra down, but they have no idea how much interest they're saving when they do that. When you've paid extra on a loan in the past, has the bank ever sent you a receipt saying, here's how much interest you just saved?
No.
Why are you laughing at me, man?
I just thought about that. It's actually funny.
Okay, so here's the thing.
Money don't show you.
Have you ever gone to the grocery store or to the department store and bought something on sale? And at the bottom of the receipt, they tell you how much money you just saved, doesn't they?
That's correct.
Why do they do that?
I guess to get you to shop back again, letting you know that you got a discount.
Listen, if your grocery store can do it and your department store can do it, don't you think your bank can do it as well? But why don't they? Okay, so the department store and the grocery store says, listen, I want you to do it again. I want you to do this again. If the bank doesn't do it, what are they actually telling you? I don't want you to do this again. I don't want you to do this again. All right. So let me show you something here. All right. So you're seeing this $280,000 mortgage, right?
Yes.
And we're scrolling down here to the very first payment. I know it's going to be a little lag between what you're hearing and what you see on your television screen. But do you see payment number 1 yet?
Yes, I see it now.
All right, so payment number one, payment one. So you've got, take a look at the top headings. We got principal up here. We got interest. We got cumulative principal, cumulative interest, and cumulative principal balance. Okay.
Mhm.
So on payment number one, how much money goes to principal?
480.
And how
49.
much goes to interest?
700.
Ooh.
Good.
What did you say, sir?
700.
No bad words this morning.
Lord.
Okay. So that's a lot of money, isn't it?
Yes, that is more than the
Okay.
principal.
Now when you pay this $480.49, they subtract that from the $280 that you owe, and you're left with $279,519.51 on your principal balance. The bank takes that number, does their math with that, and says, oh, because you owe less, your interest payment is going to be less on the very next line. Okay. So your interest payment goes all the way down on line 2, all the way down to what?
On line, what's that, line 2?
Yeah.
To 698.
Yeah, $698.80 goes from $700 all the way down to $698.80. How does that make you feel any better?
Oh no.
Now, let me show you what actually happens when you pay extra on a loan. And this is not how the P.I.L.L method works, but I'm just showing you how the bank makes its money and what we can do to disrupt their ability to charge us all of this interest. Then I'll tell you what we can do with that $25,000. But you got to understand this part first, okay?
Yeah.
Okay, so let's say you're making this first payment in January, all right? And I gave you this schedule, and you can see I made my payment in January. Everybody's happy. And what would be, I said, now take a look at your schedule and tell me, what is the principal payment for February when February rolls around? What's the principal payment for next month?
You saying for February 6th, 98?
No, that's the interest. What's the principal payment?
Oh, 481.
481. So here's my question. If you make this payment in January, do you have to wait till February to give the bank that $481.69?
No.
If you had it, could you give it to the bank in January?
Yes.
If you did, you realize no interest comes out of that money. All of that money goes to principal.
Do you have to request for the principal?
Yeah, you do. You do. But there's different ways that the different banks do it. But let's say for this sake, we've already done all of that. You've got all the permissions. Everything is in place. Okay.
Yeah.
So if we take that $481.69, we apply that to principal in January, aren't we paid down to line 2 in January?
Yes.
Yes. So our next mortgage payment for February is now on what line of this schedule? Since we're already on line 2.
Yeah, for the third.
Exactly. This is the new February payment. $482.90 and $697.59. That's the new February payment. We just got rid of one line off your amortization schedule for $481.69. Number 2 line is gone. How does that make you feel?
Not too bad.
Okay. Would you like to feel even better?
Of course.
All right. Tell me what happened to the $698.80 on line 2, the interest part. What happened to that?
You're still paying that interest, right?
Nope.
It's gone.
It's gone. Totally gone. Eliminated.
It's canceled.
It's canceled.
Wow. But your payment, I guess the when you pay on that principal, is you saying to cancel out the interest?
Yes.
Each time?
Listen,
that
brother,
you pay ahead?
so we're going to back up. Your grocery store wants you to know how much money you save when you buy something on sale. But your bank doesn't want you to know how much you save when you give them extra money.
Wow.
This is why.
So back to that 10 grand you said I'll be holding and saving. If I make that payment within that after that first mortgage payment,
Oh,
that will
listen, man, you
cancel
way
out.
ahead. See, you ruined it from. Listen,
Oh, okay.
I was getting all geared up to drop a big old bomb, a gem, and I was gonna look all smart, and you took all of it.
Can we to hear it? Do it anyway.
Yeah, I'm sorry.
No, don't be sorry, man. Don't be sorry, because I can tell how your brain is working. So if we get this loan, you still have your 25 grand in the bank, right?
Yeah.
So let me ask you something. Just take a look at line 12 here. Okay. This is $5,845.82 in principal payments. That's all the principal payments added up. Okay. For 1 year. Here's my question. Do you have to give the bank this $5,800 in 12 monthly installments?
No.
If you had it, could you give it to them all at one time?
Yes.
And be paid down to line 12 in 1 month?
Wow. Are you serious? Are you serious?
Yes,
You
sir.
said that will cover the whole year, basically.
Yeah. Now you have a mortgage payment every month, but your mortgage payment, if you did this in January, your mortgage payment for February would be on what line of this schedule then?
If you said it'll be on the 3rd, correct?
Nope. And say if we pay
If
it
I
down,
make a payment for February.
Yeah. So if we take this and we pay it all at one time, the 5845.82, and pay down to line 12 in 1 month, we're already
That's the
down to
whole
line
year.
12. And so our next mortgage payment will be on what line of this schedule that you're looking at?
The 13th.
Exactly. This is February's new payment.
Wow.
Exactly. Now we can talk.
Let me repeat this again.
Okay.
Can I repeat?
But
You telling me
what
after I
happened to
make
what
that
happened to the
first
interest, brother?
payment, huh?
Oh, he said, listen.
I can't believe it.
So now, that was Kurt. He said, when you do this, he said, what happened to all this interest?
There you go.
What happened to all that?
I guess you don't pay it.
You don't pay it. You pay all the way down to here, not for $8,320.06. You pay down to right there for only $700. Boom.
Wow.
Okay. Did you know your mortgage worked like that?
I swear I did.
Did your accountant share this with you?
No, not at all.
Did your real estate agent share this with you?
Not at all. And I talk to her often.
How about the banker? How about the banker that gave you the loan?
Nope.
Nope. All of that. You get that right here in the P.I.L.L method room. Okay? Valuable information. Now we're ready for the big question. If you get this loan, the $280,000 loan, you still have your 25 grand in the bank, don't you?
Yes.
Could you make your first payment and then give them the 25 grand?
Yes.
And what would happen? So we're going to see this cumulative principle. We're going to go down and stop at $25,000. Are you ready?
Yep.
Okay, that's 5,000. That's 11,000. That's 18,000. $25,000. We just knocked off. When it catches up, how many years did we just knock off with that 25 grand? We just knocked off 4 years off this mortgage. But if you give the bank that $25,000 before you close on the loan, you start out with a 360 payment loan for the same $255,000.
Wow. That's great information. That's great.
So, sir, what was this worth the price of admission today?
Yes, big time. Oh my God. I'm gonna contact my bank afterwards. I gotta double check with this one.
Listen. Here's what I need you to do. Okay. The person that sold you this loan is a loan officer. Guess what loan officers don't Guess what they don't need to know to sell loans? They don't need to know how this works. And they don't.
Oh,
They're salesmen.
They're salespeople. They're not bankers. They're salespeople. So if you ask them, is this possible? They'll probably say, oh, no, because guess what? They're putting large down payments on their loans as well, because that's what they're taught to do. Now, I've got videos out there since, I don't know, I've got videos out there since, like 2009, 2010. And so this information has been out there for a very long time. But the reason why it's not widespread, the reason why you don't see other people copying what I'm doing is because I own the copyright.
wow.
And so if they have not been to my class, they won't know this. Do you know how many people have learned this information, got excited about it, went back to their bank, and the bank said, oh, that's impossible. You can't do that. You can't knock off all that interest. And then that person comes back to me and says, my bank said I can't do that. And I said, okay, let's look at it this way. Let's say you got your $280,000 loan, right? You made your first payment, and then you found a lottery ticket on the ground, and it was a winner. Okay. Now you take that money and you pay off this mortgage. You pay off the whole $280,000. What happens to all this interest that they wanted to charge you? What happens to all of it?
Gone. Nothing.
If all of it can be gone, how come some of it can't be gone? So don't let people tell you, who aren't skilled in how an amortization schedule actually works, but are skilled in how to sell a mortgage, tell you that this can't work. Because there's got to be a benefit to paying off early. You just didn't know it was that much, because nobody's teaching it anywhere. What do you say, sir?
Oh, man, I appreciate it. I'm going to definitely get in contact. This is real good information. I swear I didn't know anything.
Well, listen, here's what you can also do. You can go to ice10k.com. All right, ice10k.com. Or I think it's on this link as well, to get a free savings and earnings report. So you can go to the ice10klive.com, and there's a button that says, the second button down on the left, that says get a savings and earnings report. How would you like to know the month, day, and year you can be debt free, not just on your mortgage, but all of your debt? That's your mortgage. If you got student loans, credit cards, car loans, everything can be done in about 7 to 9 years instead of 30 years to never.
That's excellent.
Fill out that information. Somebody from my staff will give you a call, and then set up a consultation for you. And then you'll know the month and year you'll be debt free, how much interest you're going to save. And then we're going to show you how to take that interest savings and turn it into generational wealth for your family. Instead of giving it to the bank to invest, how about you invest all that interest we're going to save you?
Oh, that's great. I love it. Thank you.
Are you glad you showed up today?
Yes, and I just popped in. I seen it. I'm like, I'm about to purchase closing on this house on January 19th. I said, let me see if I can get some info in here. That's awesome.
Do you have any other questions for us this morning, sir?
What I had? I think that is it.
Well, listen,
Right.
if something else comes up, you stay up on the stage. If something else comes up, you go ahead and ask that question. Okay. What state are you in?
Georgia, Lithonia, Georgia, Atlanta.
Listen, man, a lot of people are in Georgia. Let's see. I'm going to be actually in Georgia speaking February 17th. I believe it's February 17th. I got to take a look at the calendar. I'll be speaking in a small church there, going over all of this information, man. And so listen, get with us. And then when you contact us, I'll give you that date, and then we'll meet face to face in Georgia, because I'm right over here in Huntsville, Alabama.
Oh, I used to work out there a lot.
Yeah.
Yep, I used to service Kroger's out there.
Come on, man. Come on. Listen, I am so glad you showed up. But if you got another question, please come back with it. Do we have are you complete for now?
Yes. One more.
Yeah.
As far as that's what I want to ask.
Mhm.
As far as the escrow,
Yes.
is that going to be separate when you make all these large payments? How's that?
Oh man, you're going to go down that road with me today? Find out, and I'll tell you why you want to do this later. But find out if you can opt out of escrow.
What?
Yeah, because listen, when you have an escrow account, all the bank is doing is setting up a savings account for you. So you're paying your mortgage amount, and they're taking the your taxes and insurance, dividing it by 12, and adding that to your mortgage payment.
Yeah.
And they're putting that money in a savings account for you that pays you no interest, so that they can pay your taxes and insurance for you.
Yeah.
Yeah. So if you could take that money, okay, if you could take that money, your taxes and insurance, do you have any idea how much that's going to be, your escrow payments?
Ooh, I want to say 500, 400 maybe.
Okay, about $400. Watch this. Okay, about $400. What are these principal payments here? About the same as your escrow payment?
That's correct.
What if that money could be going to your principal instead?
That'd be perfect.
And look how much interest you're saving each time you do that. Okay, a year's worth of doing that would save you about $7,633 in interest. So let's say, so Don, how do I pay my taxes and insurance? Do you know they take credit cards? He says, well, I'm going to pay interest on the credit card, Don. But I tell you that, but it won't be $7,000 worth. I'll show you how to pay $100 or $200 interest on that, while you're taking that money that they're putting in a savings account for you, making no interest, where we can use that money to save you over $7,000 in interest you don't have to pay the bank. So let me ask you this. Would it be okay for you to pay $200 in interest so you can save $7,000 in interest?
Yes.
All day, every day.
Yeah. So, quick question.
Yeah.
So basically, you're making year payments on those insurance and as far as taxes. Is that what you want to
ask it again, because I'm not quite catching it.
For instance, when you say opt out of escrow,
meaning you don't give them the money for taxes and insurance, you pay it yourself.
Gotcha.
You can pay your own taxes and your own insurance depending on the loan that you have.
Okay.
Some loans require it, an escrow account, but some loans will allow you to opt out of paying it so you can pay it on your own.
How would we do that?
How would we do what?
Pay the taxes and insurance by ourselves.
I guess they come in separately.
Yeah. So here's what you could do. So if they're saving that money, this is Alexis, right?
Yeah.
So if they're saving that money for you, could you save it for yourself?
Yes.
Could you put that money in a savings account for yourself and you get the interest off of it?
Yes.
Well, that's one way. The other way is use a credit card.
Okay.
Yeah. As long as they get their money, they don't care how they get it. Pay them with a credit card. And then the money that would have, so during the year, you can use that money during the year to save you tons of interest on your mortgage, and then subtract the interest that you pay on the credit card from the interest savings. So we'll show you, we have a computer program that keeps track of all of your interest savings. You put everything in just like a financial GPS, and we run all of this for you so you don't have to. The program tells you exactly how much money to move, when to move it, when to pay the taxes, when to pay the insurance, put it on the credit card. We're going to show you exactly how much it's going to cost you. And we'll also show you how much you saved by using that money correctly for you. How does that sound, sir? And ma'am?
I need that. That sounds awesome.
Great.
Okay. All right. Feek, listen, are you all set for now?
Yeah, that's that, man. Thank you so much.
Are you
That's
gonna
a good.
are you gonna contact us?
Yes, for sure.
Are you gonna buy my book?
100%. I'm about to purchase it now. Clearly, this is $1,000 worth of information you just gave
Oh, listen, that needs to be a clip.
me.
All right. Listen, folks, thank you so very much. Back to you, Jared. Hey,
Sorry, I was clipping that.
Jared's clipping.
Yeah, I was clipping that. And I just sent it to you. But thank you so much, Fee, for coming to the stage. And if you're new to this room, welcome to the Hill Method. Make sure to click that greenhouse at the top, follow the club. Also, make sure to follow Don, who's right next to me. Click the always on notification with that bell so that every time he pops on stage, you'll be alerted. As Feek mentioned, he was about to pay $25,000 in down payment, and Don showed him how he can shave off years off his mortgage. So if you want your friends and family to be able to witness this type of information, make sure to click that plus sign and invite your friends and family into this room so they can go into 2022 with this knowledge so that they can save interest costs and transfer that into their kids' inheritance or whatever things that they would like to do to add value to their lives. Also, I'd love for you to make sure you click on the profiles of Kenyatta, YCEO, Credit Goddess, Valley, Credit King, and 10K Cards, and give them all a follow as well. And Don mentioned he has a book. Click the link at the top and you can buy the book. And then you'll also get a value add with the 10K card. For the sake of the amount of questions on stage, we're going to get into the book after the next question. But definitely stay tuned and invite people in the room. If you're on Facebook, Twitter, YouTube, or LinkedIn, make sure to click that share option so your friends and family can have this mind-blowing information.
Hey, Jared,
real quick,
Jared, I want to finish up. I want to finish up this one thing for Feek, because if he puts his $25,000 down, okay, as a prepayment instead of a down payment, if he had put it down as a down payment, we figured out he was going to save about $12,000 over 30 years. It takes 30 years, complete the loan, and then you can figure out it's $12,000 cheaper. You follow me? But if he puts that $25,000 down as a prepayment, he saves 32 grand right now. Right now, not over 12 years, but now. That's interest he does not ever have to pay. 32 grand. So do you want to use that 25,000 to save 12 grand? Or do you want to use it to save 32 grand right off the top? It's amazing. All right. Amazing. Go ahead, Jared. I just wanted to finish that up.
Yeah, no problem. And Feek, I just want to let you know, and everybody in the audience know, do not go to your real estate agent and get mad at them for not knowing this information. They just don't know what they don't know. They're not trying to hide it from you. They're not trying to be sneaky. They just do not know what they do not know. So if you know anybody in the real estate space that more than likely does not know this, make sure to ping them into the room so that they can add value to their clients as they sell them homes like Kenyatta and others are doing, Valley and others are doing for their clients. This is truly God's work. All right, so up next, we're going to go to Model Kiana. Thank you so much for coming to the stage, and let us know what your question is. And Kiana, if you're speaking, we cannot hear you. You have to go to the bottom right-hand corner and click the microphone icon.
I'm sorry. It just took me a minute to get back. I was still in the 10K card. I don't really, I guess you guys answered my questions as he was going along, so I was really paying attention. I haven't purchased the home yet, but I'm in the process. But I'm glad to hear that he, not to put all that money up front, and it's better off to do it after, because I was kind of lost with everybody saying that this is not a buyer's market now, it's more of a seller's market. And so you guys are like really breaking it down to that cost.
Well, so Model Kiana, so because of that, are you thinking about waiting to purchase, or what? What are you thinking?
I started to think of waiting to purchase. Honestly, I started to think to wait to purchase.
And what's happening every month you wait? What's happening?
Cost is getting more expensive.
Exactly. Exactly. What's the best time? Here's what the real estate investors are telling me. The best time to purchase real estate was yesterday. and just hold it. Okay. You'll never go wrong. Okay. If you want to get it now, because by waiting, it just gets more expensive.
Right.
Okay.
Thank you.
All right. You're welcome. All right. Who's next?
All right, I just want to check in with Kirk. Any questions from the live stream?
Actually, at this time, we have some comments, but no questions per se. So I want to just kind of keep it moving. We have some comments. One person says, "I'm looking forward to my appointment." Right? Anita Mickles says, "I'm looking forward to my appointment." So I'm assuming that she's already gone through and set up her appointment for a savings and earning report. But no questions at this time, Jared. So.
All right, perfect. Let's keep it moving. There's a ton of questions that are popping up, and I'm super excited to make sure we get to everyone. So, Alexis, you're up.
Jared, really quick, before Alexis, really quick. One of the things that Don didn't mention to Freak was he can save 12,000 over. I mean, how much of 1,000 over like 12 years or 8 years?
That
But you
12
have to bear in mind that sorry, what was it, Don? What was the amount?
that 12,000 was saved over 30 years. That was the
Over
12,000.
30 years.
Yeah.
Now, don't forget to mix inflation with that 12,000, please.
Yeah. Oh,
Don't forget to mix the inflation with that 12,000 bucks compared to the 30,000 saved now. That's powerful right there, Don. That part.
Thank you for that. That's from the businessman's perspective. Yes, sir. All right, go ahead, Jared.
All right. So, Alexis, thank you for coming up. Please let us know what your question is.
Yes, hi, thank you. I only had one question. If I was to put my property in a will and trustee, can I still be able to refinance like later on down the line?
Okay, now that is a legal question, and no one here that I know of is a lawyer. No one on the stage is a lawyer. Maybe somebody in the audience is that may want to chime in on that. But here's what I know to be true. Now, this is coming from a layman's perspective. Okay, there's always going to be somebody in charge of the what was it that you said? What instrument you said talking about? A
A
trust?
will and trustee?
A
Yes.
trust. Okay. There's always somebody that's going to be in charge of the trust. Okay. And that person that's in charge of the trust can make those kinds of decisions. But specifically, you want to actually get into and ask your lawyer that question of who's going to be in charge and what you're going to be able to do. But usually the person who's in charge of the trust, which could even be you, from what I understand, can make those kinds of decisions. But check with your lawyer to make sure that what you're hearing on this stage is correct. Okay.
All right, thank you.
You're welcome.
All right, all right. These have been some quick questions. So, you know what, Don? I would love for you to let people know how can they share this information with their friends and family for the holidays with that Amazon best-selling book that you put together, and what's that value add that you're going to get with 10K cards?
Oh my goodness. Listen, folks. 33 million books, 33 million titles on Amazon. There's only one title, one that gives you the information that you're getting here today, that teaches you how an amortization schedule works and how to defeat it. Only one book, and that's the P.I.L.L method, a better way to eliminate debt. That book is 6 ounces. 6 ounces. It is worth more than its weight in gold. And gold right now is about $1,600 an ounce. So if you want to do something really great for your family and friends, you want to give them something that's going to help them to understand and how to grow generational wealth from this standpoint by not giving all of that interest money to the bank, get the book for Christmas presents. Come on. Get that book for Christmas presents. And for every book you get, now, this is something we started out with individuals. When they purchase the book, they can get a 10K card, a business card, a digital business card. When you click on the business card above my head, you can have an idea of how this thing works and how powerful it is in getting your particular message out there. But what would it be like to give this kind of Christmas gift, generational wealth, understanding how loans work, from this vantage point. And as one person on the stage said today, he got $1,000 worth of information for free. Ha! What do you think you can get out of that book? Lord have mercy. So get the book. And for every book you purchase, we're going to give you a 10K card with each one so that you can give it away as gifts as well. All right. So talk to 10K. Talk to us about how valuable that would be to have a 10K card along with this book for every person in their family. Talk to us.
Oh, absolutely not. Um, you know, when we start a business, guys, our goal is to help solve problems and solve the problems of others. So if we have the solution to someone else's problem, I think it's unlawful and immoral to keep it a secret. I think the world should know exactly who you are and what you do. And what the 10K card does, it put everything all in one place. Your website, your social media, your payment options, your calendar, everything. If you have a book, it puts a link to your book as well. Every link that you have that you can share with your client in making your client's life better and helping them solve a problem, that's what a 10K card is going to do for you. So we put all the contact points in one place. And after we saw what Don was doing, Don's product and services align in terms of his morality and his litmus test to our product. So we decided to partner up with him. So every time you purchase a book from Don, you're actually going to get a 10K card paid for by Don Daniels already. So the reason Don decided to do this, he just don't want to get you wiser. You want to help you to make more money. So by having a 10K card, guys, it will streamline and save you so much more time in explaining who you are and what you do. When you have the card, just share your card. Share your card and it'll do the work for you 24/7. So click on the link above, guys. Go get a copy of Don's book. When you finish getting a copy of Don's books, don't forget, most important, we're in this room so you can get your savings and earnings report. So get a copy of Don's book. Fill out the savings and earnings report, and then submit your receipt on step 3 to get yourself your 10K card, guys. Get this done not only for you, but for your family. Because the extra money that you can put your hands on now will benefit the rest of your family and friends as time goes by. And remember, that thing that's called inflation is a real thing. So maximize on the dollars in front of you right now. With that said, Don, back to you, brother.
Thank you. Thank you. Miss Kenyatta, are you in the room?
All right.
Don, I can talk. I can go on and on.
No, it's all right. It's all right.
All right. Miss Kenyatta, are you in the house?
I am.
Listen,
and I'm just listening to the wise man speak about inflation. And I can tell you guys, listen, the investors that are purchasing real estate are still doing it. So if you're thinking about getting started, that should tell you something. They're not being fearful, neither should you. But when you go ahead and you do the right thing and purchase that book on behalf of yourself and your family, what you want to do is screenshot that receipt, go to ice10k.com and upload that receipt to the link that says I'm ready. Build out the specifications of your card, including your social media outlets, your number, etc., and tell us where you want to receive that card. In an hour or less, you will receive your 10K card value at $100.
Miss Kenyatta, I've got another question for you.
And let me clarify, that was Sean 10K. That was 10K card. She said wise man. No, I'm the wise CEO. That was Sean 10K right there, guys.
This is Sean 10K, the founder and the CEO, and a wise man. Thank you so much, Kenyatta. I appreciate it.
Yeah, that's exactly what I was
that part
saying,
right there.
Sean.
That
there
part.
you go. That's exactly what I said. Thanks.
Hey, Miss Kenyatta. So since we're talking about this,
Yes.
and part of is just not just homeowners, but real estate investors as well, from around the country, there may be some people in the audience that are thinking about real estate investing. And there are several different ways to do that. And I understand that you help people do exactly that in learning how to get the money to invest in, to purchase their investment properties. Is that something that you can do anywhere in the country almost?
Yes, yes. And I would venture to say outside of the country too. So it's great to have a network of people, right? In a span that stretches far beyond your own reach. So I can confidently say that no matter where you are, we can get you funded. Now, when it comes down to how we can get you funded, we also do refinance. We're also helping people that have commercial properties with foreclosures. And we do awesome and amazing things. I was just at a networking event with US Bank and telling them about the P.I.L.L method. They had no idea about any of this. And once I had their ear, they actually wanted to know what products we have. And when I started to tell them about the no doc and stated loans and things of the past that has came back, they were baffled. You guys, banks can't do what you think they're doing for you. And Don likes to say that they're beholden to the investors. They're not in our corners. And so we have to turn the tables and use them accordingly. Use them for what they're good for and have a backup plan for that and another backup plan. And so I just happen to be two of those backup plans. That's all I'm saying.
That's all I'm saying.
And I actually work in corporate banking, so I can tell you that it's not part of the job description. So I'm very qualified to tell you that I have a master's degree. So I want to make sure you all understand that in banking, it is not their job to educate you on all of your options. It really is your job to go out there and consult with your financial planner, consult with your accountant, and consult with your attorney and your real estate agent as well, so that you can educate yourself, because people are destroyed for a lack of knowledge. And as you know, wisdom is the principal thing. And above all, get it understanding, and make sure you understand who you're following, because the anointing flows from the top down.
That's right. And now you can add one more layer of education. Your interest cancellation expert right here, right now. You're
That
getting this,
part.
that part. You can get that
That part.
information and to go along with all of this and to save you that money. All right. Thank you, everyone. Thank you, everyone. Listen, I'm having such a good time sharing this information, talking about the 10K card, talking about the book, and sharing information. I listen, I'm going to be high all day because this brother came on here, just saw the title, came into the room and found out he was getting ready to put 25,000 of his hard-earned dollars down on his mortgage so he could save $12,000 over 30 years, and with inflation would have eaten that up. But now he can use that 25 grand to knock off 4 years off a 30-year mortgage. And then once he gets with the P.I.L.L method, I'm going to show him how to pay everything off in about 7 years. Not
And
just,
you know who tells them to do that, Don?
what's that?
Real estate agents. Every day, all day. That's what they're taught in real estate school.
Well, not the real estate agents that come to this
Here.
stage. Isn't that right,
Yes.
Miss Valley?
Hey Don, are you ready to get higher?
Yeah, I'm ready. Listen,
All right, let's get higher. Let's serve one more person.
Let's go ahead.
Because these hand raises are coming in, and I want to make sure that we get to everybody.
Oh, that's why you're doing what you're doing, brother. You're the moderator. Let's go.
All right. So up next we got Dr. Jewel. Thank you so much for coming on the stage. Please let us know what your question is. And Dr. Jewel, if you're speaking, we cannot hear you. You got to go to the bottom right-hand corner and click that microphone icon.
Thank you. It's been a very interesting room. I'm learning a lot and just doing some Google searches and learning a little bit more, just to kind of tune into the methods that you guys are referring to, which I think is absolutely great. I had a question initially when the young man was referred to paying his interest or taking on interest with a credit card vis-a-vis the interest being accumulated by the bank. And I guess my question was, as a follow-up, would we also say that credit cards should be paid off each month and not accrue interest? Or I guess I didn't really understand, because it felt like, well, why set someone up to further accrue interest at all, vis-a-vis just totally paying down the debt? And that just may be a philosophical difference, but I'm not sure. So I just wanted to follow up on that. That was my only question.
Dr. Jewel, That is an excellent question, because what we're talking about is we're always going to be paying interest. So we want to choose what kind of interest we want to pay. Okay. So let me give you a quick example of interest rate versus interest cost. Can I do that?
Oh, absolutely.
Okay, so I had a young couple that they're on our program, and they're doing exactly what you're doing. They said they're paying off their credit cards every single month, and they were surprised when our computer program told them to ignore paying off their credit card. So I'm going to put on the screen here what we're talking about. We're going to put that back on the screen, and we're going to put in they're going to put in their mortgage, which was around $225,000. Okay. And their interest rate at the time was 3.5. All right. Oops. That didn't come out right. Let me fix that.
May I ask you to pause for 1 second?
Sure.
Thank you so much. I've been off Clubhouse for a while.
Yes, ma'am.
And I have no idea what screen you're referring to, because I think there's been some updates.
Okay. Okay. So if are you listening on your phone right now?
Yes, all right.
Okay, and if you're near a computer or a tablet, you can actually see this because we're live streaming it to Facebook, YouTube, Twitter, and LinkedIn. So if you want to watch it, you can.
Awesome. Can you give me I guess it'll be easiest to go to Facebook. So can you give me the Facebook?
Yeah, you go to ICE, you would go to ice10klive.com, ice10klive.com, and then you can click on the Facebook link. Or you can just go to Facebook and search P.I.L.L Method.
Perfect. Okay. Thank you. And I'm tapping in.
All right, great. All right, so what we're going to be talking about is the difference between interest rate and interest cost. Okay, so to set this up and to give you some time to get in, they had $1,200 on their credit card. $1,200 on their credit card, and the program was saying, "Don't pay it off this month," and they were saying, "What? I never pay credit card interest." There's some people on this stage that never, ever pay credit card interest, and I applaud you for that. But what I'm trying to say is there is another interest that we need to be concerned about. And I'm teaching a new term here. It's called inattentional blindness. Inattentional blindness. We're blind to what we don't pay attention to. All right. So everybody's trying to pay off their credit cards so they don't pay credit card interest because they have these high interest rates. But that doesn't mean a high interest cost. So their interest on their card was 12%. And they said, "I don't want to pay 12% money. I don't want to pay 12% on this." And I said, "That's 12% annually." This is right. So now let's do a little bit of math, and let's show you why the program is telling you to avoid paying that right now instead of paying it all off. 12% a year means 1% a month. So you're actually being charged 1% a month. So if you pay off the credit card now, you are avoiding paying how much interest? 1% of $1,200 is $12. So by paying that off, you said, "Oh, congratulations, you just saved yourself $12. You follow me, Dr. Jewel? Now,
I am sorry about that.
That's okay.
Yes.
That's okay.
And I'm watching you on YouTube. Also.
All right.
Thank you.
Great. So I'm going to be talking to you back and forth because this is going to be helpful to everybody on the stage. So now at $12 a month, that does not sound near as bad as 12% on $1,200, does it? When you know it's just $12, right?
Absolutely.
Okay, so now if we take that $1,200, take their $1,200 and put it on that credit card, they save $12. But let me show you. I'm scrolling down here to their mortgage here, and it's going to stop. All right. So if they were to take, in this case, they're paying $354.10 on principal, $656.25 on interest, and they're paying that every month faithfully because that was a good payment for them. All right. But they had no idea what we call in my book, we call it interest consumption. That's another word. That's another new term for you. Interest consumption. How much interest are you consuming each month? The average family consumes 35 to 39% of their take-home pay in just interest alone. So I just pointed out to them that if they were to take that just $1,000, this is $1,065.40. This is cumulative principal. If they put that down on this loan, they save this interest. Okay? Almost $1,900 in interest by taking $1,065 and putting it on the mortgage. They save that much in interest. So, if you were to take if you were to ask the question, would it make more sense to put that on the credit card and save $12, or put it on the mortgage and save $1,900?
Oh, absolutely. It's a no-brainer.
So it's not just philosophical, it is mathematical. So this is why we do what we do. We do the math because when you hear interest rate, that sets off an alarm bell. And then we have a fear response to that. And so nobody wants to pay 12% credit card interest. But when they find out how much it actually is by doing the math, then, oh, if that's the case, I'll pay $12 to save $1,900 any day. So these are the kinds of things that we're talking about. So, and our program keeps track of all of that. So you're putting the right amount of money in the right spot at the right time. And our whole focus is not how fast to pay down the debt. Our focus is on how cheaply we can pay down the debt. Does that make sense to you?
Oh, it absolutely does. Thank you so much. I felt a little, I didn't want to seem argumentative when I asked the question, because I know that everybody's got a different philosophy as far as paying debt, accumulating debt, etc. So I didn't want to kind of spark off a whole, but I'm glad that I did ask, because I really not only like this method in theory. If I could share, when I bought my first home, I bought it in cash. It was like $10K. I'm from Cleveland, so everybody knows.
But
I live in Los Angeles now. But
yeah.
Chat.
Well, Dr. Jewell, listen, if you don't ask these kind of questions, if somebody's saying something and you think they're not giving people the truth, it's your responsibility. I'm reading your bio here, and you've got your PhD in education. And if somebody is miseducating the people and you stay quiet, are you being true to your doctorate?
Oh, absolutely not. And I appreciate you. That's why I left this app, because there were just so many conversations. I was like, let me just, But yeah, I appreciate that you definitely can see that from its positive stance, because I just wanted to be clear on exactly what you were saying. And I think it opened up a door for you to add even more clarity. And I think this is wonderful. I think that this is definitely the information that our people especially need, but all people need, because we're literally enslaved by debt at this point.
Doctor, anytime you want to come to this platform, you do that. And when did you defend?
Sorry about that. I don't know what's going on with this app. Every time I try to something else, I'm like, what did I push? Okay. I defended in 2018, so I'm relatively new.
Relatively new. All right. Well, listen, because of that, because of what you're doing, because of what you're dedicated, and you have a divorced mom with 5 children. Listen, this you talking about going to school, getting a doctorate, and writing what essentially is a book with 5 kids.
Yes, sir.
Lord have
Yes, sir.
mercy. Listen, you
Yes,
guys
sir.
need to find out what goes into becoming a PhD. Listen, we're going to give you a 10K card. All right, and we got our folks working on this, on getting you a 10K card right now.
Oh,
Okay,
oh, thank you.
listen, you're going to get
I
that.
actually,
Go ahead.
oh, I'm sorry. Thank you. I was actually thinking, I need to figure out how to turn this into a way to just remind people that they can do anything. And,
Hmm.
um, the last thing I need is to add a new career, but just figure out how to just, especially women, because I think that so often we as women kind of get pigeonholed into this is now your lot in life, unfortunately,
Hmm.
as if having children and bearing a family is somehow a cutoff to your dreams.
Mm.
And I just don't think that, I don't think it exists like that. I think that my children um, appreciated seeing my journey and helping me and just feeling that sense of, wow, if my mom can do that, what can I do? And I
Exactly.
think that's what we as all people should show to one another. So thank you for the 10K card. I really greatly appreciate it. Thank you so much.
Exactly. We're going to get you that 10K card. And listen, what you're talking about, there's another guy on the stage that talks about that. His middle name has been changed to Hope, Mr. Alvin Hope Johnson. And he talks about exactly what you're talking about, removing all excuses. Now, you listen, if anybody had some excuses, it would have been you. I got 5 kids and you want me to write a book? Lord have mercy. Okay. Mr. Mr. Alvin Johnson, can you speak to that a little bit? Or did he leave? Okay.
Sorry about that. I was trying to hit the mic and hit the wrong button. Good morning.
Good morning,
Yeah,
sir.
Don. Me and you laugh about this being some of the 2 older guys on the app. Excuses, I don't know what those are, and I love the fact that Dr. Jewel just says she is removing all excuses from other people's lives by being a living example. Right? That's amazing. So thank you for sharing that.
All right. Tell us a little bit about who you are, Alvin. Uncle Al, please tell us who you are and what you do.
Sure, Don. My name's Alvin Hope Johnson, and I think I'm a dealer of hope. I'm a beacon of light for those that didn't think they could make it, because I shouldn't have made it. If you're willing to endure and go through the process, again, I'm a living example that you can do anything. A living example. You can do anything you want to do. And so I'm a developer. We build apartments. We're going to go build 20,000 units in 5 years. That's $4 billion worth of apartments. And we're doing it through group economics, showing people how to invest their money, how to put their money into deals like this that bring them a lot of tax depreciation, a lot of advantages that way, and build a whole lot of generational wealth. So that's what I'm doing, and glad to be sitting here with my friends this morning.
Well, listen, I thank you for that. But could you also, would it be okay if I mentioned that you didn't start there, that you actually worked for free for somebody to get your start?
Yeah, go ahead. Talk about it.
No, I want you to talk about it.
Well, I was 44 years old.
Lord have mercy.
Yeah, Lord have mercy. And I said it was. And my life had fallen apart. I had literally almost given up all hope again. And I met a guy that said he would help me, and he allowed me to come into his life. I was 44. I told this guy, man, I'll sharpen your pencils or shine your shoes. I just need to be with you. And then I called him for a year after he quit answering my telephone calls. Kept calling. Finally picked up the phone and said, damn it, Alvin, I'm tired of you calling me. Everybody said they want it, but nobody's willing to do the work. If you want to know what I do, then you come here and I'll put you up for 30 days. I went to this guy's office with the biggest freaking suitcase I could find, because I was not planning on leaving. And 13 months later, when he died, I became the president of a company that today would be worth about $2 billion, 16,000 units of apartments through serving. So that's how I started. Well, that's the last start. That ain't the first. That ain't the first start. But see, it's never too late, and there are no excuses. None.
Wow, wow. And listen, what's coming up? So, are you going to be teaching some of the these kinds of concepts or bringing some people together? Talk to us about what you're doing in January, so other people can get some the benefits that you got out of not giving up, not giving in.
Well, I'll tell you, what we're doing in January, I think is going to be really, really epic. Some people see it as a party, some people see it as a mastermind, some people see it as a networking event. It's all of that, but really, what it is we're tearing down the walls of excuse building. That black people don't have no freaking access. I'm tired of hearing that glass ceiling junk. I'm tired of hearing all of the disparity talk. Oh, woe is me. Man, bump all that. And that ain't what I wanted to say. So we're doing an event in January, Clubhouse Live in Miami, where we've got, I don't know, 20, 25 speakers and sponsors that look like me. They're the top in their field, doing what they do in real estate and in business. And we're giving everything we can so that everybody that under the sound of our voice can change their life. Now they have to do the work, but there's no excuse. Oh, I didn't know about that. Oh, I didn't know we had access to that. We're removing all of that. And then secondarily, but most importantly, there are 50 young adults coming from the inner city of Miami. These kids are 14 to 21 years old. They have every excuse in the book to not be successful right now. Every excuse. All they see is, I don't know if you saw the news about Miami Gardens apartments every weekend, like Chicago. That's where these kids are coming from. We're going to show them what winning looks like. We're going to give them a different viewpoint. They get to see people successful that look like them. That's what this is about. No more excuses.
Wow.
Get your ticket and let's go.
Wow. Thank
and
you.
Don is one of the big sponsors of this event. So again, people think, oh, they're just trying to sell money, make money selling tickets. I could make a whole lot more money doing a whole lot more stuff than hanging out on Clubhouse and throwing events and charging my credit card $250,000 and hoping enough people show up for me to pay for it. I could do a whole lot more things than that. But I choose to do this. Maybe I was led to do this. Y'all come be a part.
All right, Uncle Al, listen, and the last thing I want to ask you, why are you allowing the P.I.L.L method to come in and me to speak at your event when so much is on the line, especially for these young people?
Well, Don, I tell you, I went back and forth with you in the very beginning. I challenged you, and the only reason I challenged you is because I understand very well how you teach and what you do. But I think we have a responsibility when we know better, we do better. And if you have a flock of people that listen to you, your family, you should be the protector of your household. If you have a business or an office, you should be the protector of that space. So when we first met Don on the app, hey, I wanted to make sure that he was a guy of high integrity. Not that I'm anybody's keeper or judge or anything, but it's our responsibility. And he is that. Don is that. And so many people are afraid, as he said, of debt and interest and don't know how to manage their money, that we need somebody like Don teaching you how to get out of that interest. Because if you just face it, a house is the biggest thing most people will ever own. And so many people lose their homes because they don't even know how to manage their money. I ain't talking about losing a job. I'm talking about don't know how to manage money. So what he's teaching is how to cancel debt quickly so that your life can be a little bit better. And that's why we applaud Don and asking him and being a part of what we're doing, because he's just educating a different group of people that may never have $1 million house or may never have $1 million in the bank. And they may get there faster because of what he's teaching. But for the everyday guy, any of us, what he's teaching is really great. Thank you, Don.
And thank you, Uncle Al. Jared, back to you, sir.
Yes, yes. Thank you so much for popping in, Alvin. And you're welcome here anytime. We do this room Monday, Wednesday, Friday at 8 a.m. Eastern Time and 9:30 a.m. Eastern Time on Sunday. So we'd love for you to pop in and continue to spread the word about Clubhouse Live, because it's going to be a super impactful event. Your network is your net worth, and the net worth that's going to be speaking and attending that event is going to be astronomical. It's going to be a great way to kick off your 2022. So I put the 10K card for Clubhouse Live up above our head. So if you're in the audience on Clubhouse, make sure to go ahead and click on that link, bookmark it, check out all the VIP speakers, check out all of the details of the event, and pick your tier of ticket. I recommend getting the VIP. That investment is going to be returned significantly, but whichever one you can afford, it's definitely worth being in the building, and you will have the opportunity to meet Alvin, 10K, Kenyatta, myself, Don, and a bunch of others. So make sure to click the link above and purchase your ticket. And if you're listening on YouTube, Facebook, LinkedIn, or Twitter, you can go to clubhouselive3.com. So clubhouselive3.com, and you can check out the 10K card. And if you're interested in having a 10K card for your event, similar to what has been set up here, make sure to contact 10K Cards, who is up on the stage right now. All right. With that being said, just want to reset real quick before we go into the end of our last 30 minutes. Make sure you're clicking the greenhouse at the top and following this club, the P.I.L.L method. Also make sure you're clicking on Don's profile and following him. Click the always on notifications so that whenever he pops on a real estate or finance stage, you'll be alerted. And also I'd love for you to click on Kenyatta, YCEO, Kurt, Credit Goddess, Valley, Credit King, 10K Cards, Daphne, Alvin,
And Jared.
Yeah, don't worry about me. I'm good. I got enough followers. But you should follow me if you're interested in what I do. But whatever. It's not about me today. Coffee Brown, Jonathan, and Dr. Femi. These people do amazing work on this app, from accounting to real estate, to getting your information out to all the audio streams, as Kirk has done for Don. Credit, like Credit Goddess, business development, like 10K Cards. So there's a lot of Black excellence and information on this stage. So make sure to follow every single person, and I highly recommend clicking the always on. And if you're interested in following me to see why people follow me, go ahead and do that. I like to curate spaces that are focused on empowerment, community building, generational wealth, and that's why I resonate with Don. And I will scream from the mountaintop that everybody should be part of the P.I.L.L method, because he is literally saving people tens to hundreds of thousands of dollars with this information. And we have one more question on the stage, but I think we have room for a couple more. So if you want to come on stage, I highly recommend you be like Feek and save yourself years off your mortgage by just asking a simple question. Closed mouths do not get fed. And go ahead and click that plus sign, invite people into the room. And if you're on the other streaming platforms, go ahead and click that share option and share to as many people as possible so they can go into 2022 understanding and knowing this information. Last thing I'll say is this: if you are new to the room and you would like to see these examples live, you can go to a laptop or an iPad and you can type in ice10klive.com, and you can go ahead and watch the examples on Facebook, YouTube, Twitter, or LinkedIn while Don is explaining it on Clubhouse. So go ahead and do that, and I'll update the link at the top for those that do not have an iPad or a laptop. All right, so let's go ahead and jump into Joseph's question. Joseph, thanks for coming on stage. Please let us know what your question is.
Hi, Joe. Thank you so much. And I will say thank you to Don. Well, mine is not necessarily a question, but actually to say thank you for actually what you guys are putting out there. I'm a real estate investor, a CPA, and a public account. And this is something I've been actually over the course of last year, I've been actually teaching real estate investors in the New Jersey, New York areas to actually use to cut down on their mortgage, especially for those who are buying their properties. And one of the reasons why I actually jump on here is I'll give a quick answer to Alexis. I know she was asking about how to refinance her property while she has a property in the trust. I guess she has a couple of questions to answer to know whether she can actually refinance it. Number one question is the trust an irrevocable trust or a revocable trust? If it's a revocable trust, then you cannot refinance it. Some banks, though, if it's a credit union, would allow that. Number two question that she also have to focus is it a land trust or is it maybe a living trust or maybe a trust for keeping for the family? And depending on what those three answers would, any of these three questions will be, she have to look at is the property free and clear. If it's a free and clear, then she can actually refinance it through entity because a trust actually is seen as an entity. If it's a living trust, that means that she has other properties or personal properties in that trust. Then means that it's a bad idea for you to actually go refinance this property while sitting in a living trust. Yes, you will get a refinance, but it's a bad idea because you're actually exposing liability to the other properties. But also look at if it's none of the above, but it's a land trust. That means if it's a land trust and it's free and clear, then go ahead. If it's a land trust but not free and clear, you cannot go ahead because depending on the bank you're actually going to go with, they may not allow you to do that. Some banks will, especially credit union, they will, but not all banks.
Joseph, thank you so much for your input. Can we also share that? Can I ask you just a couple of questions? And
Thanks.
so, are you a lawyer?
Well, I do. I'm not a lawyer. I'm a CPA. I
Okay.
do fund structures and
Okay.
also asset protection stuff.
All
So
right.
this is pretty much my kind of alley.
I understand, and we appreciate that. So, folks, so what we're doing here is giving you his opinion based on a vast amount of knowledge. It is not advice.
It's not
So,
advice. So it's not advice. I'm actually giving you more. It's not. I'm giving a hypothesis to lead you to
yes.
your answers. So now when you go to these lawyers, because also, I guess one of the reasons why I do this is that
Mhm.
there are a lot of lawyers who happen to be in asset protection stuff and everything,
Yeah.
but they don't actually lead with value, as in they assume they know what you're looking for.
Right.
So when you go to them and you don't have the right or the proper questions to ask them, what you end up coming out with, you end up coming out with a great, beautiful solution, but it's really not tailored to you,
Hmm. So,
right?
listen.
So when you start asking these questions, so if it's a matter that even will, so usually I always tell people, if the questions you're asking may have a factor to your taxes and everything, make sure you have your CPA and your lawyer sit on the same table and for them to squash every disagreement they will have there.
Listen,
By
folks.
doing that, you will actually have the solutions that you
Joseph,
want.
Joseph,
li-
Don is the founder of the house. He's been dying to get a word in, my brother.
Listen,
Allow
folks.
him to speak. Okay, one mic, one mic.
Listen,
Go for
folks.
it, Don.
Here's what we're talking about. We want you to be able to do exactly what Joseph is talking about. He gave you a lot of information. This is why we have this is being recorded. You can play back this information, and like he says, we're giving you some good information based on his vast knowledge and experience, and then you can take this information, take it to your CPA, your lawyer, and get some good advice. But knowing what questions to ask, and this is what he's saying, knowing what questions to ask is going to be important. All right. Thank you so very much, Joseph, for your input today.
You're welcome.
All right. All right. So, Jared, back to you, sir.
All right. So we had a question up there, but they're no longer on stage. So if you would like to ask a question, make sure to raise your hands. We have 27 minutes left. I will tell you this, Don's time is very, very valuable. So you want to take advantage of this Clubhouse window where you can ask a question for free, and that question will benefit the entire audience when he breaks down your answer live on Facebook, Twitter, LinkedIn, or YouTube.
And
If you'd like to.
Jared, I'm so glad you mentioned that. And for some folks, please remember that what Jared is talking about is true. The free information is here. When you call me, it's not going to be free, but it will be of value. All right. So go ahead, Jared.
Absolutely. So closed mouths don't get fed. Be like Feek and ask a question that will change the trajectory of your 2022 financially. So Tina Laurie, thank you so much for coming on stage. Please let us know what your question is.
Hi, everyone. Good morning. I had a couple of quick questions. The first one, and maybe you can just send me a DM. I want to know what 10K is, 10K cards. I'm uninformed about it. I was trying to read and Google, but it's a lot of links, and I just want to know what it is. The other question is to talk about car financing. I know that vehicles depreciate and people have financing. I have a car note, but it's very low interest rate. Like I'm paying less than 2%. I'm nearly done with it. And because of pandemic, I'm not driving that much. So I think I just want to pay it off and keep it and, have it just if I need it. Because now I'm not driving that much. I'm literally either flying or commuting by public trans, or if I have a car or a driver. So can you talk about that? With the low interest rate, should I pay it off? It's not much left on it. I think I have like 2 years, and I did a 4-year financing.
All right, Tina Lori, listen, that is an excellent question. Do you have any other debt other than the car?
I have my car and I have my mortgage only at this time.
Excellent. So give me an example. How much did you borrow for the car?
I should know this.
Just give me a
I
round
don't
number. Just doesn't have to be
remember.
exactly.
Maybe $42,000.
I love that. I love that. 42,000. And you said it was a 4-year amortization?
Yes.
40. Okay, so that's 48 months. All right. And do you remember the interest rate at all? Anything close?
Yeah, it's below 2%. It's about 1.99.
1.99. Okay, so here's what I'm putting this on the screen. All right, and that means your payment. Okay, wait a second here. Boop, 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 boop. Take that out. Okay, $42,000, and so at 1.99, that means your payment is right around $911. Okay, so is that about right?
Yeah, my payment. Well, I did a trade in, so
Okay.
I think it's a little less. So my payment is $565. That's what I
565.
pay every
All
month.
right. So
Yes.
it's a little bit less. Okay. So we did five. If we do 565, 565. Let me back this in. All right. Thank you for that. $565. And then that gives us what we started out with. Because of your down payment, you started out with around $26,000. Okay. Now at 1.99, if you're 2 years in, okay, you're 2 years in, so that's 24 months. So you've paid a lot of the interest already. Now the total amount of interest on this loan, total amount is $1,072.04. $1,072.04. Okay. If you're 2 years in, you've already paid $794 of that interest already. And I want you to catch this. All right. You still owe around $12,739 on this loan. And you've already paid let's call it $800 of $1,072. So you have less than $300 interest left on this loan. Are you following me so far?
Yes, I am.
If you pay it off right now, all you're going to save is the $300.
Yeah, that's what I was thinking. I'm like, it was such a great.
Yep.
It's such a great deal, and they took my trade in and gave me almost the full value of the trade in, and that's why I bought the new car. And then
if you
the
put
money was cheap to borrow too.
If you put $12,000 on your mortgage, oh my goodness, how much interest you would save. I don't even know what your mortgage is, but I can tell you this, you're going to save a lot more than $300.
No, that's great. Yeah, I'm doing some of the P.I.L.L thing. And I'm doing it quarterly.
Yeah.
Just because that's when I have money. When I get bonuses and stuff, it comes in quarterly.
Right.
Some of it's annually. So I'm doing it then, and I'm paying attention to how much interest I'm saving. So I haven't been in your room often, but every time I've come in, it's been extraordinary. So I really appreciate you, and I follow all of you here. And I want to connect with Kenyatta because we're both in Illinois. I'm in the city of Chicago, but I also work in San Francisco, New York. I would love to connect and do some deals. I have some ideas around some cooperative housing so that people can become members and live in the apartments and do some stuff. So I appreciate you, and I appreciate all of you, honestly. This is what we need. You know, I always think about W.E.B. Du Bois, the talented 10th. We need you. We need you. I'm Tina Laurie, the Joy Collector.
Tina, listen, folks, did you just hear that? Another clubhouse connection. Somebody who's a
Yes,
developer
yes.
and somebody who's a lender. Get it together, ladies. And listen. Forgive me for. I hope I'm not out of turn, but that's some magic going on there. That's some magic going on there, folks. I appreciate you all. All right. So Miss Tina Laurie, listen, the only thing that I would add to that is when you're putting a certain amount of money down, all right, think about this. There is a point where more is too much. And we don't talk about this much. This gives us an opportunity to talk about the law of diminished return. This is an example of the law of diminished return with your car. By taking $12,000 and paying it off, I'm only going to save about $300 in interest or less. So that's violating the law of diminished return. I'm paying a whole bunch of money, but I'm getting a little bit of benefit. When you're putting money on your mortgage, depending on when you're doing it, there's a certain point at which more is going to be too much. You want to make sure that when you put that more money on the mortgage, how much money am I saving per dollar applied? And this is what I mean by that. If we had a calculator that says I have this much money available and I could put this much money on my mortgage and I could save $4 for every dollar in principal I prepay. For every extra dollar I put on, let's say we can save $4 at this point. Doing it a different way, about the same amount of money, but not doing it in the right month, not doing it at with the exact amounts of money, you don't know when the amount of interest you could save per dollar goes down to $3.50. You know you're saving, but unless you're knowing exactly how much money you're saving. So we can't optimize what we cannot measure. And we have been taught not to measure. We've been taught to put money on principal, pay it off fast, and we're saving some interest. With the P.I.L.L method, what we're showing you is how to save the maximum amount of interest that's mathematically possible for you with the least amount of money applied. Is that helpful?
Tremendously. I appreciate that.
All right. So contact us if you want to know how to do this and save the most amount of money in interest, not just some money. Then go to our 10K card, the ICE10KLive.com, and click on that little button that says "Get a Savings and Earnings Report" and know exactly how much interest you can save. And then we're also going to show you how to take those interest savings and then invest that money and turn it into some potential wealth for you as well. Don't pay all that money to the bank if you don't have to, but take that money that you would have paid to the bank and invest it into some more of your properties. All right, Jared, back to you, sir.
All right. Thank you so much, Tina Laurie, for coming to the stage. And also for your car question, I highly recommend reaching out to Kelly Saunders. She does a lot of great stuff in the automotive space on
Kelly,
this app.
Lord have mercy. Yes, yes, yes.
Okay, cool. Yeah. And you can reach her at kelly10k.com. And 10K cards, while you're on the phone, Tina asked, what is a 10K card? She just wants to get it straight from the source. So if you want to give her a quick breakdown, if you're free, please do.
Oh, you got it. Super good day, Tina. How are you? Hope all is well. Is Tina on the stage or she's on? All right.
No, I'm here. Hi.
What's up, Queen? All right. So, do you have a paper business card that you normally use?
I don't do that anymore. I just use my LinkedIn now.
Beautiful. All right. So when you were using your paper business card, if you went to a networking event and there's 500 people there, you walk to the 100 card. Chances are you'll miss connecting with 400 members. So what we do, we take all of the information that's normally on your conventional business card and then some, and we put it together in a digital format. So whenever you're out and about and you're traveling, all you need to do is to touch on your digital card where it says scan my QR code, and anyone that point their camera at your QR code, your information is going to pop up on their phone. You can also click on the button that says share my card. You can send it as a text message, email, airdrop, WhatsApp, any of those mediums to anyone. So you'll never run out of business card ever again. Also, if you make changes in any area of your business, we will update it on your card, and your clients will have the always have the real time information on it. All right. Does that answer the questions of working?
That's great. Yeah, it does. So it's a QR code that's exclusively for you, your business, and all your links,
That
social,
is
everything.
that is correct. And there's unlimited links that you can add onto the card. You have no limit as to how many contact points you can put on the card.
Awesome.
Okay.
And is there different levels? Because that's why I was getting confused by the different things. Silver, gold, like what's like
Very
what?
good. Very good.
Thank
So the
you.
silver level, it's a one-time payment of $300. And whenever you share your card and someone become inspired by yours and they want to buy one, you're gonna get 20% on that referral fee. And the gold card, it comes with two lead capture. We call them the blue diamonds. So the blue diamond is when you work hard to acquire a client, you want your client to go out there and sing your praises and make it easy for their network to connect with you. So the blue diamond helps you get you more customers from your existing client pool.
Thank
Awesome.
you.
You're super
Awesome.
welcome. I'm gonna have the
Awesome.
team put together a sample version for you, Tina, and then I'm gonna follow up with you to see how best we can serve you. Is that okay?
Yeah, that's great. All of my contact information for my business is in my profile.
Beautiful. We'll get to work on that, working from the profile. All right. With that said, Jared, back to you, brother.
All
All
right.
right.
All
So
right.
if you'd like to see an example of what a 10K card looks like, you can click the link at the top above us, and you can see the Don's 10K card layout. And then also, if you want to get a 10K card, I highly recommend you purchase Don's book. And with that book purchase, you'll be able to go to the 10K card that's above. All right. You'll screenshot the receipt of the book, the pill method. You'll click that step 2 that says I'm ready, and you'll be able to upload the receipt of the book purchase, put in the information you'd like for the sample version of a 10K card, and 10K and his team will get it to you extremely quickly within the day, sometimes within the hour, and you'll be able to utilize this 10K card on Clubhouse as a pinned link or in live in-person events as a QR code. It is a really dope first impression, and highly recommend everybody invest in it. So definitely buy the book, and you'll get that $100 value for buying that book, and then you'll also get tens to $100,000 and cost savings information. But the book is great, but the real thing is even better. You definitely want to contact Don and his team, click the savings and earnings report, and get some time with his team to figure out the day, month, and year you can be debt free. All right, perfect. So we got 12 minutes left. So we're going to go with one more question. Joyce, thank you so much for coming on stage. Please let us know what your question is.
Hi, thank you for taking my question in this room. It's been fantastic. I got a lot of great information. So glad to be in the audience. My question is, my brother who has 3 properties wants to get rid of his properties now, and I want to get into real estate investing before I retire. I have 2 properties now. My husband not. One's in his name, one is in my name, or our name together. So I want to know how to move forward with that. I have some equity in one property, 76,000. So it's about $200,000 worth of equity now. Let me see, about $200,000 value for the house. But so I have equity. So I want to go ahead and move. I want to buy my brother's properties from him, or either start to buy other things with the equity. So how would I move forward with that? My credit is really good. It's over 700. It's about 715 now, something like that. So I've been working on my credit for the past year or so. Thank you for listening. Thank you. I'm done speaking for now.
Joyce, listen, are you Are you anywhere near your brother right now, Joyce? Because if you're
No, he's not here. I'm
okay,
actually at the
okay,
ATM right now getting
all
some
right,
money
all
in
right,
the bank.
okay, okay. Shh, 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 shh. Be very, very quiet. Do whatever you can to move on those properties now. Okay. We have, I don't know if you were in earlier, but we have Kenyatta at the top. All right. Who at the top of the page, who is a business purpose lender that can help you to do everything that you need to do to move forward on these properties right now. Okay. I mean, you can fill out, she can send you the paperwork today to start filling out so that you can move on that. Are you still there? Oh, she's at the ATM.
I am still here. I'm
Okay.
still here. I'm listening. Taking a screenshot of her picture, taking her information.
All
Thank
right.
you.
So she's
I'll do
gonna.
you one better. I'm gonna back channel you.
Okay.
Fantastic.
And the reason why I wanted you to stay quiet is because if your brother knew what he had, he would keep his properties. So move in on it and purchase it up. Now's the time to purchase, not the time to liquidate. Now's the time to purchase. And this is a very good move. This will be I don't even have to see the properties. And I don't know that much about real estate investing. I just know what I've learned since I've been here on Clubhouse, and every opportunity that I am acquiring. Now's the time to acquire. I am so glad that, listen, Uncle Alvin always says when preparation meets opportunity. And so you have prepared. You've got a great credit score. You've got equity. and now when the opportunity came along, now you can take advantage of it. My goodness, folks, let's start now to put ourselves in proper position to do what she is doing. And listen, do you have any other questions for us right now, Miss Joyce?
No, thank you. Very helpful.
All right, listen, and if you want, we're going to put together a program with the P.I.L.L method. We can show you how you can pay off all of those mortgages, and if you're not interested in paying them off, but you're more interested in gaining equity at 5 times the regular rate so that you can cash out refi 5 to 7 years sooner and then put that money into buying more properties, we can show you that as well. Jared, I think we have a couple of more mods on the stage that can use some time to introduce themselves.
Yep. I was thinking since we only got 8 minutes left,
Yep.
Maybe we can have you do your final remarks in terms of how people can contact you as well as your book, and then we'll go with moderator outros and close down the room so that we can get to our Sunday fun day.
All right. Listen, I just want, since I'm going to use my time to instead of doing that, I want to use my time to put something else on the screen right now, especially for our real estate investors. And once we're going to take care of that right now and share this, because this is valuable information for our real estate investors. All right. So I have right now what you're going to be able to see on the screen is a real estate investor right here in Huntsville, Alabama. And this guy, listen, he knows what he's doing when it comes to making money. These buildings that he has is making a ton of money. He got a hold of my book and then gave me a call and said, I want to apply this program. And I thought he was kidding, because anybody who's in Huntsville, Alabama, and here's this guy's name, they're going to know who he is. So I thought somebody was kidding me. All right. So, but anyway, so we took a look at his situation. He has a couple of loans. One is a mortgage, and another, these are all multi doors here. Okay. So I want to take a look at this one loan here, where it's a 5% SBA loan. And in 37 months, that's on line 2. In 37 months, he paid this loan down by $99,795.91 by making minimum payments. Okay. But look how much interest he paid to get it. in 37 months. Okay. A little over 3 years, $222,000 in interest to get. Now he's making plenty of money. He on these two buildings, he's cash flowing about 40 grand. Cash flowing about 40 grand. And his payments, the mortgage payments come to about $14,000. So he's doing quite well on that tip. But he had no idea, he was not paying attention to this part. The interest cost to get the $99,000 in equity. All right. So here's what we're taking a look at. I'm going to show this right quick. I'm going to change screens. We're going to put something else up here. And let me see here. All right. Where is that? All right. So we're going to put in the, I'm going to put in one of these mortgages. Okay. And in that mortgage, let's go and get rid of some of these. All right. Get rid of that. Get rid of that. All right. And then put the mortgage in. Go ahead.
We're still looking at the example.
Okay, I've got to get the right one. I got to get the right one up. No and as soon as I get that up, I'll be able to show you what the mortgage actually looks like and what we're doing for this particular gentleman. All right.
Got it.
And so let me do this and paste that. All right, good. All right, so now this is 5%. All right, now we're going to change screens here. All right, and boom, and share this. Now this you're going to love. All right. There we go. So this loan, oh, that's not it. 300, let's see, 25, 300 months. There we go. Okay. This loan is $1,488,906. Okay. $1,488,000. The payment on is at 5%. The payment on this is $87.04. This is just one of the loans. So this is how it's breaking down. On this $1,488,000. Okay, the bank wants $1,122,000 in interest on this loan. $1,122,000. This is how he's paying this thing down. $2,500 goes to principal, $6,000 goes to interest. All right. So here's what we're talking about. He has $100,000, $100,000 in a reserve fund to take care of all of his properties. $100,000. All right. So take care of everything. That's on top of everything that he's making. And he says, Don, even though I'm cash flowing 40,000, I'm putting about 6,000 into my reserve fund. That's the rest of the money I want to be able to use to reinvest. So you can't use any of the money, any of that other money that I'm using to reinvest. I said, let's take a look at the $100,000 you have in reserve. Okay. So just for instance, if we were to take in 1 year, he's paying this loan down by about $30,000. Okay. In 1 year. And it's costing him 73 grand in interest. Can you look at that? That's $100,000 in 1 year. So even though he's receiving a lot of money in rent and he's making a ton of money, he is still paying out $100,000 just for $30,000 worth of benefit. Based on what you've learned here, could he, out of his $100,000 he has in reserve, could he borrow 30 grand from himself? Now, I don't know. Our program isn't working exactly like, just giving you some examples here. Could he borrow $30,000 from himself out of his $100,000, apply it to this mortgage, and kill all of this interest and pay this loan down to here in 1 month? Boom. Now, doing it the bank way, the bank wants to charge him $73,748.14 to give them the same amount of money over a 12-month period. He could borrow some of that money from himself out of his reserve fund, not using a dime of the money that he's earmarked for investing, right? And pay it down to the same point on his amortization schedule in 1 month, which means he paid it down to right here, not for $73,748.14. He did it for only $6,203.78 in interest, saving himself $67,000 by giving the bank the same amount of money. Now he's putting remember, he's putting $6,000 into his reserve fund monthly. So if he does $30,000, it's going to take him what, 5 months to put it back? And he could do it again? Lord have mercy. He's going to be able to cash out refi several years sooner, take that cash out at a much lower interest cost. I'm showing him to cut this thing short. I'm showing him, and instead of paying over $1 million in interest, he's only going to be paying about $243,000. What could he do with the $891,000 in interest he's not going to pay the bank? Could he take that money as well and invest that money? See, this used to be the cost of doing business, folks. The interest cost on these loans. If you are a real estate investor, you do not have to do this anymore. As a real estate investor, take that money you would have paid in interest and invest that money into growing your portfolio, into developing generational wealth for you and your family. Okay? Stop giving it to the bank. You don't have to. These are my last words for today, Jared. You take it from here.
All right. Well, actually, I would love for your last words to be, how can people contact you?
Okay.
And also, how can they buy the book?
All right. I just get so excited, man. All right. See, if you want to know how to do this, if you're a real estate investor, if you're or even just a homeowner that, you have that single family home, you can contact us at ICE10KLive.com. ICE. That's Interest Cancellation Expert. ICE10KLive.com. And click on that button that says Get a Savings and Earnings Report. Put in your financial data, just like this gentleman did, and find out how you could save hundreds of thousands of dollars in interest, and how you can take that money and grow it for yourself. Not only that, folks, but get the book. I mean, right now, out of 33 million titles, there's only one book that talks about what we're talking about here. One, to how to defeat an amortization schedule and how to take that money and invest it in yourself instead of giving it to the bank. All right. I love the bank. We're going to show you how to borrow money at a discount. Don't pay full retail for your money. Borrow your money at wholesale. All right. And then take the savings and invest it back into your companies. That's what we're talking about, folks. And if you get the book, for every book right now until the end of the year, for every book you purchase, we'll give you a 10K card that goes along with it, so you could give it out, the book and the 10K card, to family and friends as gifts. Now, this is the gift that's going to keep on giving, because once they get into our program, the program is a lifetime program that just keeps working and working and working. We have people now that are paying off their third and fourth mortgage on the same program, because once you're in the program, you're in for life, and you only pay once. Lord have mercy. You can't beat that with a stick. So give them something that's going to keep on giving to them, not just the book, but the 10K card as well. And Miss Kenyatta, will you please tell them for every book they buy, what can they do to get a receipt and to get a 10K card for every single book?
After they made the best decision they can make to purchase the P.I.L.L Method book, what they would want to do then is screenshot the receipt and upload it to ice10k.com, the link that says I'm ready. You're going to click that link. If you bought 10 books, you're going to click the link 10 times. You're going to build out that card to your specifications and your family specification, your friend specifications. Designate a place for those cards to go, and give them more than an hour for a lot of cards, but each card under an hour you can get a card delivered valued at $100.
Wow, wow, wow. And folks, for just to make sure you understand this completely about knowing the month, day, and year you can be debt free, go ahead and click on that link so that you can get your savings and earnings report. Somebody from my company will give you a call, confirm that information with you, and then set up a consultation. You can know the month, day, and year you could be debt free, how much interest you could save, and how you can take that interest savings and turn it into generational wealth. Thank you so very much for being with us for the last 2 hours.
All right. So again, if you're in the room right now, I want to make sure you click that greenhouse at the top and follow the club. Also, make sure you follow Don and click the always on notification with the bell so that when he goes on a real estate stage or a finance stage, you'll be alerted. And and also make sure to follow all these moderators as they give their outros. And if you're on YouTube, Facebook, Twitter, or LinkedIn, make sure to listen out for the websites, write them down. All these replays will be available in the P.I.L.L Method Club or on Don's profile. So there's a wealth of knowledge, and feel free to click the share button for those replays. For anybody that's not on Clubhouse, let's spread this information to as many people as possible going into 2022 via the book, via the replays on YouTube. We are really going to be spreading this word to everybody as possible. And so for the sake of the folks that have not had a chance to introduce themselves, we're going to start from the bottom and go up. So let's start with Katina McClinton, and then we'll go up via PTR order. So Katina, you have the floor.
Good morning, everyone. My name is Katina McClinton, the general contractor in the state of Florida. I do commercial and residential new builds, build outs, and additions. I'm also a loan purpose originator for your construction, your commercial businesses, and business funding is the prize at Pack Enterprise. Thank you for allowing me to introduce myself. You guys have a wonderful rest of your Sunday.
And if everybody, and listen, if you're not noticing, I want you to know that I noticed of all the women-owned businesses that are on this stage. Listen, somebody's got to shout it out, and I'm going to shout it from the rooftops.
I brought them all up.
Thank you, YCEO.
Love you too.
All right. Thank you, Katina. And please come back anytime. We do this from Monday, Wednesday, Friday, 8 a.m. Eastern time, and then Sunday, 9:30 a.m. Eastern time. And we'll have an altered schedule for the holidays, and I will bring that up at the end. But Jonathan, looks like Femi's on the phone. So our Dr. Femi's on the phone. So we're going to pass it to you. Please introduce yourself for all the folks in the audience. And Jonathan, if you're speaking, for whatever reason, you're not audible.
Good morning, everyone. Thank you, Jared. My name is Jonathan Jones. Can you hear me now, Jared?
Yes.
Yeah, we can. We can hear you fine. Is somebody muting? Okay, go ahead, Jonathan.
Uh-oh. All right, thank you, Jared. Once again, my name is Jonathan Jones. I actually help people get access to the legal system. Also help people with their credit. Most of you don't know that, but I'm not going to take up too much of your time. Go ahead and check out my 10K card. That's at the Jones Group, 10K All
right, thank you. Up next, we have Coffee. Coffee, if you're speaking, you're on mute. And if she moved away from the phone, just go ahead and click her profile. Just recommend just giving her a follow, as well as check out her 10K card. She can be reached at coffee10k.com, spelled KOFFE10k.com. All right, up next is Daphne.
Good morning, and thank you so much for letting me share the stage. I appreciate it. My name is Daphne Christine. I am a business and commercial purpose loan broker out of Charlotte, North Carolina. I specialize in helping investors mainly with getting funding for their fix and flips, their refis, their investment properties. I even help out with foreclosure relief. If you want to know more about me, you can just check out my bio. And I just wanted to be here on stage today in the room to always support my friend and my colleague, Don. So thanks for having me.
All right, looks like RB is on the phone, so we'll circle back to her when she is done. But let's go with Credit Goddess. Please do your outro.
You know, RB and I is actually there. We're actually on the phone, so she just hung up so she can do her outro. But hey, everyone, my name is Rosalora Lewis, also known as Credit Goddess. I am all things credit. I specialize in both personal and business credit, and also I do alternative funding. I offer lending to any of the business owners, any investors. But in order for us to have access to that, yes, credit is very important. I'm so glad that we had this talk as usual, because in order for us to have generational wealth, we need to have access to funds, because if we're only depending on our active income, we're just limited. So having access to other people's money is the way to go. And I'm the key to that. And where Don comes in is help you save on interest costs. So that way we can use that money and put it into other investment productivity to make more money, babies. That's what it's all about. So if any of you guys are having any challenges with your personal credit or need to build your personal and business credit, you guys can definitely tap in with me at Credit Goddess 10K. That's Credit Goddess 10k.com. That's Credit Goddess 10k.com. Or you guys can follow me on both platforms, social media, Instagram and Facebook at yourcreditgoddess.com. Again, so honored to be on this platform. And thank you guys so much. You guys have a wonderful and prosperous week. Thanks.
All right, up next is RB, and feel free to talk about Clubhouse Live.
Oh, listen, RB,
Hey, thank you, so my name is RB, the realtor, licensed realtor.
RB, may I interrupt for just a second?
Sure.
I want to thank you for spending your Clubhouse anniversary day with us on our stage. Amen. Go right ahead.
Yes, sir. Yes, it is my Clubhouse anniversary. I'm super excited. It's been an amazing year with all of our new real estate family and friends that I've been able to connect with through Clubhouse. Honestly feel blessed to be a part of this community and to be able to just share information with people and also learn new things, because we're forever learners, right? One of the best things that I came across is just a collective of people that have the same ideas, which is that we want to change our community, empower our community for the better, to understand how to get that generational wealth through the acquisition of real estate. And one of the ways to make sure that you're not just getting property, but understanding how to make your property work for your advantage is through the P.I.L.L method. And so I'm just thankful for being able to connect with all of you guys. And also thank you, Don, because he was one of the sponsors from the Clubhouse to the Real House. If you check my Instagram, you'll see he was on stage at our event that took place on October 15th and 16th, as well as Rose and a whole bunch of other people that were here. I think Daphne was there, also Kenyatta, and a whole bunch of people were just there. And it was an amazing event, and just really, really enjoyed being able to connect with people in real life. These in-person events are so invaluable. So with that being said, One of the things that I like to do is help empower the community on how to create that generational wealth through the acquisition of real estate through buying and holding. But there are times that you need to sell so that you can scale. And so I help people do that as well. So if you're looking to buy or sell any real estate or looking how to get started in real estate in a very realistic way by leveraging your 9 to 5 to increase your investment portfolio, please feel free to reach out. This evening, I actually am teaching people, Don, that could have benefited from using this pill method so that they could get their debt down. And I'm teaching them how to actually create more profit through their properties that they already own, how to produce a profitable property, which allows you to be able to understand all of the structures and strategies that you need to have in place to cash flow off your property, both the inside and the outside, whether it's a co-op, condo, multifamily, or single family home. There's so many creative ways to create income off of a place that you own, even down to the driveway, garage, and other unused spaces that you probably wouldn't have known. So if you're interested in that, please feel free to reach out to me. You can reach out to me on my 10K card, which is rb10k.com, or you can click the link in my Instagram bio to be able to register for this evening 8 p.m. virtual seminar. And my Instagram is NYS_realtor. That's NYS_realtor. I'm just here to add value and connect with you all and help wherever I can. I'm here in service. It is Sunday, and that's what we're all about as a community. And that's what I love about this space.
Listen, folks, I just want you also to know that just one of the states that RB does business in is New York. And when it comes to real estate or lending or even insurance, New York seems to be a different animal all by itself. You can't compare it to any other state in the country. She can help you to navigate what's going on with real estate in New York, whereas you might need another realtor for something else, but she can help you with New York, which is a different animal altogether. All right. Thank you so much, RB.
Thank you for having me.
All right. Up next, we got is Kirk.
I wasn't sure if oh yes, Credit Goddess did go already. Right
Yes.
before I give my outro, I wanted to grab this one comment real quick here from Feek. Feek came back, Don. I don't know if you caught this comment. Feek came back. He said, "Thank you so much, Don. I'm Feek Miller. I just purchased your book. You are a lifesaver." That's what this room is all about. This is what it's one of the reasons why I love working with people like Don to get their message out there at a more rapid pace. Put it in what we call Front Street. Allow people to have to step over it, right? It's in the marketplace. It's where they already are. It's how they already consume content. One of the things that you'll learn working with me is you never want to dictate to people how they want to consume your content. You don't want to say to them, you have to come to this place or this place. You want to put it in all the different places so that they can consume it in the way that they naturally do that. And my name is Kirk Nugent. I'm your live video strategist, live video coach. And we believe that your live stream is your digital storefront, and you can build your brand, build your message, build your audience with live video. Check me out, kirk10klive.com, kirk10klive.com. Thank you.
All right, up next is the YCO.
All right, I had to get back over. Hi, everybody. I'm Tiffany, the Y CEO. And, you know, I actually got that phrase from some of my conferences I was teaching at, because one of the speakers said, you were full of so much wisdom, and not just wisdom, but knowledge. And it kind of stuck. And this happened back in 1996, actually. So yeah, that's kind of how that name happened. And, you know, the thing I love about this room, guys, is millions of people are suffering and struggling with the same exact problems that you all have been hearing on the stage, and they don't know where to turn. That's why this room is so important. That's why this technique is so important. And also, guys, that's why credentials are important. Credentials are college degrees, certifications, licenses, and detailed in-depth training that give you credibility in your field. And that gives you wisdom, not just because you're a hustler. There's a lot of hustlers out here. But what I can tell you is over here in the P.I.L.L method, you're going to find strategies that are going to help you win. Not only that, it's going to be backed up with books and information that you can qualify. That is very important. And that's the difference between the P.I.L.L method and a lot of these other spaces that people are running out here. And it has structure and order because everything should be done decent and in order. If you would like to connect with me and learn more about what we're doing, we've got a room coming up. I'm in collaborations all over the place, even with BET. I'm so excited. And what I can tell you is come into our spaces so that you can learn. And the more you learn, the more you know, because when you stop learning, you get left behind. So the YCEO Network has collaborated with the Women Who Edify and the Fabulous Females on Clubhouse. We've got a room at 5 o'clock tonight. Come over there and be uplifted and edified, because on Sundays we try to lift each other, because in the weeks you have to hit the ground running on Monday morning. So we're here to help edify you this evening. So I'm Tiffany, the YCEO. You can find me at yceo10k.com. God bless.
Okay, so with all that being said, you guys, we share a space together, and there's so much talent, so much wealth of knowledge on this stage, and I just find it a pleasure and a blessing to be amongst them. Thank you, Don, for the nicely and just awesome curated space here. And I am Kenyatta. You can find me at Kenyatta 10K. And in short, I can assist you with your real estate goals. Just connect with me. That's all.
Right. And my name is Jared Albert, and I am really passionate about increasing diversity in tech. I host a lot of tech rooms. Also, I work with 10X Incubator, where goal is to fund 10,000 startups by 2031. And I would love to, increase the diversity of tech startup founders. Even if you only have a napkin idea, we have the resources and infrastructure to get your idea from just an idea to a scaled out startup with either a IPO, acquisition, exit. So the next room I'll be hopping into is a pitch room, and then also I want to shout out the room that will be happening tonight at 8 p.m. Eastern time in the Black Think Tank, and it'll be featuring Dawn. It's called "Learn How to Pay Off Your Mortgage in 7 Years." # compound interest matters, and I'll definitely be popping in there to amplify that room as well. So if you want to get in touch with me, feel free to follow me on Clubhouse, or you can reach me at jarrett10k.com. That's JARRETT10k.com. All right, pass it to you, Don, with the last words, and we'll go ahead and close the room out.
Listen, thank you everyone for being with us today for the last 2 hours. We love doing this room. We love giving out this information, and some people got some real value out of it. And I hope that some of you that were listening in got value out of that as well. Remember, get the book, and pass them out like the leaves of autumn to everyone that they will love you for that. All right. And get a 10K card that goes along with it. But again, I'm going to be back here tonight again at 8 p.m. Eastern time, and the Black Think Tank. Look it up and click that notification bell. And so we're going to be doing some of the same thing, and we're going to be interviewed there this evening. So listen, folks, thank you so very much. We're going to be back here again tomorrow morning at 8 a.m. Eastern time, doing the same thing all over again with new information, because we're going to have new questions. Thank you very much for allowing us to come into your space and giving us the privilege of your time. You could have been anywhere else, but you chose to be here, and we appreciate it. I'm Don, and I'm done speaking for now. Kurt.